Welcome to the Careers in Finance series on FinPod by CFI, where we sit down with finance professionals to explore their career journeys. Join us for ideas, insights, and inspiration to help you advance your career in finance.
Being young, taking risks, it's something I would encourage folks to do. As long as the best advice I got was actually from Ryan. He basically was like, if you feel like it could be the next right step, even if it's not exactly where you think your career is going to end up, if you feel like you're making forward progress and it's the next right step, I would encourage you to, go see it through.
All right. Welcome back to another episode of Careers in Finance. I'm so excited to introduce the audience to Alex Yuditski. Alex, thanks for joining us.
I'm so happy to be here. It's great to see you, Anna.
So good to see you. I've been waiting for this conversation for a long time as I've followed your incredible career journey so far. So you and I met. I was working at a company called Linux Academy. We were working with an investment banker, William Blair, which is a really incredible mid-market, investment banking firm. And you were our analyst. So I should say that we were joined at the hip for many months.
We were.
And oh gosh, wow. And again, just was an incredible experience. And we also enjoyed working with you, and just we're so grateful to be paired with you. And obviously the incredible team there as well. But it's been really fun since then. That was about 5 years ago. It's been so fun to watch your career journey since then.
Thank you so much. Yeah, time has flown, but I can safely say that working with you in Linux Academy was my favorite engagement at William Blair. So,
ooh, I love it. That's music to my ears. So I want to start. I always start with your origin story, and really that is, what did you study in school? Did you always know that you were going to follow a career in finance? So tell us a little bit about that.
Totally. Yeah. So great to meet you, everybody out there watching. I went to Wake Forest University, which is in North Carolina. Initially thought I was going to study history of all subjects. Have always been a student of history and thought it was really interesting. My sophomore year, I pivoted to studying economics because I had a 101 class that I really enjoyed. And from there, I really didn't have a clearly defined sense of what I wanted to do as a career path. I had a number of different internships, everything from, sales ops and marketing. And it was really a friend of mine who I trusted at Wake Forest who mentioned that an investment bank based out of actually Birmingham, Alabama, was hiring folks for their leveraged finance team. And so didn't really know what investment banking was until I was probably in my senior fall, which is ironic because most college students these days know, by freshman year or sometimes even high school rising into college, that investment banking is the path they want to pursue. And so was fortunate enough to land a job at Regents right after graduation from Wake Forest.
Well, what I love about this is that you didn't know and you weren't necessarily clear. And I think so many people, to your point, do know, and they're planning this from high school, right? And they're just like methodically planning every step or trying to architect every step. And what I a lot of times I meet younger people that are in that phase of taking their first step, from maybe college to their first professional role, and they feel like the opportunities won't be open to them. And yet one of the things I love about your career, and I can't wait to kind of culminate with where you're at now, is that so much opportunity, kind of one thing led to the next thing. And, I know you say you've been falling upwards, but I absolutely know it's been very just really well architected, I would say, career journey, which again, we can't wait to unpack with you. But so you didn't know necessarily what investment banking was, ended up at Regions in North Carolina?
It was. So I took a job in their Charlotte, North Carolina office initially as a coverage investment banker in the transportation and logistics group. And so what that meant is I was working on providing investment banking services and products to companies operating specifically in trucking, inland river barges and waterways, and rail. But we did cargo moving, not people moving. And so I learned more about the transportation infrastructure in this country than I ever hoped to have. And it was a fascinating journey of understanding how goods and services move throughout this nation of ours. I got exposure to a lot of different investment banking products like high yield bond offerings, investment grade bond offerings, leverage loans, investment grade loans, M&A services, all of those types of things. And so really got to see the full spectrum of the capital markets in that role. Within Regions, I actually lateraled to the leverage finance department, which was industry agnostic, so not specifically focused on transportation anymore. And in that leverage finance seat, we provided a number of different services across a multitude of different industries. And it was in that seat that I worked with all different types of companies, from refrigerated trucking to Taco Bell franchisees to scaffolding businesses all across primarily the Southeast United States. Got to work with some phenomenal people. And the deals in that seat as a generalist that resonated the most with me were the businesses who either were leveraging software in their day-to-day operations, or they were technology companies themselves. And so it was about maybe 2.5 years into this role that I got bitten by the technology bug, and started to kind of put my antenna out and see if I could find a role where I was specifically a technology investment banker. And so that's what leads me to my next chapter at William Blair.
Yeah. Okay. So before we get into that, a couple of questions. What was it like initially going into the transportation focused part of the business? Like, how did you get up to speed? Who's helping you? What are you having to do on your own? Like, so what's that process like of all of a sudden you're thrown into transportation and don't know much about it?
Right. Yeah. It was a funny ramp. I mean, it was great. I had a bunch of mentors in that group. Tim Curry was the group head. Doug Combs and Taylor. His last name is escaping me right now, but they were already well versed in the transportation and logistics industry. And so I remember we used to publish a weekly newsletter that we sent to clients and sent to the bank, and it would basically give an overview of what had happened in the transportation world, what indices we cared about that were publicly tracked, leading indicators, lagging indicators, what were corn futures trading at, because corn is one of the farmed products that gets transported across the US. And so they were like, listen, you're going to do this newsletter and we're going to tell you everything about it and what all of these different things means. And then hopefully after a few weeks of producing this newsletter, you're going to start to notice trends. You're start to better understand what all of these different things mean. And so I think it was really a combination of just jumping right into it head first, and then leaning on my more senior folks to get me ramped up in the industry sort of jargon.
So before you made the lateral move there at Regions, so that first time that you were still in the transportation sector, what was the day in the life like? What's it really like that first year or so out of school, jumping into investment banking analyst role?
Yeah, gosh. I mean, you're testing my memory, but I think really the primary role was investment banking. Fundamentally, it's a service to a client, right? So whether that means the client wants to buy another business or they need to raise debt or equity capital to fund their operations, what those coverage groups entailed were how do we best serve the transportation companies that we work for. And so I specifically remember a trucking company in East Texas, one of the largest refrigerated trucking companies in the country. They were looking to raise, I believe, debt capital to fund some acquisitions. And so what my day-to-day might look like is, modeling out what the art of the possible could look like for them from a capital perspective, preparing a pitch book for other prospective banks who are interested in potentially participating in the credit with the refrigerated trucking company for them to better understand the business. So a lot of positioning and helping people understand what a company was all about, the highlights and the lowlights, so they were well informed. A lot of public market work. So I would constantly be looking at public comparables in both equity and debt for publicly traded transportation companies, internal meetings. That was kind of the bulk.
Yeah. Did you have to travel much or not then?
As a more junior professional, I was primarily in office. There was a little bit of travel involved, but it was probably once a quarter to a client site. It wasn't it wasn't very much. As you would sort of graduate up in those roles, you would and become a coverage banker where you're actively managing the relationships. That would entail a lot of travel.
Okay. Before we jump off of this one, I have to ask a little side road. Did you know how to model, or did you learn on the job? This is always so interesting to me. How do people figure it out?
Yeah, I actually have a funny story about this. So absolutely not. Like, had never heard of the term EBITDA before I stepped on the floor. Literally, that's not a
I
joke.
love it.
We went to an 8-week summer analyst training program in Atlanta, Georgia. And I'll never forget, they had a bunch of experts come in and train us before we hit the desk. And we had to do this modeling exercise. And I remember sitting next to my friend Chad, who's a lifelong friend now. He was in the analyst program with me, and he's coming to my wedding in 3 weeks. He seems like he had command of the subject matter. And so I sat right next to him and I was like, dude, I need your help. How do I get through this? And so I remember we ended up submitting our models to the proctor of the training. And basically her feedback was, guys, these are atrocious. I don't know what you were thinking, but this is all wrong and I'm going to have to teach you again. And so it was just a funny anecdote where, we got the training on the job. We were terrible at it. We learned over the months and years, hopefully months and not years, because otherwise my career would have been very short there. But yeah, absolutely not. Had no background whatsoever. No business doing that job.
You made the lateral move. You get exposed to a lot of things. You start to think tech and software is interesting. So you start to think about making a move. How did you go from where you were at Regions to William Blair? Like, let's talk about making that step.
Yeah. It was actually a little bit smoother than I had anticipated it to be. Regions is a great organization, but not super well known outside of the Southeast United States. And so it was actually through a friend of mine who was that friend I mentioned, Chad, who I met on the first day of training. He got an inbound email from a William Blair recruiter looking to place someone locally in Charlotte. He was pretty set at remaining at Regions, but knew I was contemplating a move. And so he introduced me to the internal William Blair recruiter. I ended up, I guess, impressing them enough to get flown out to San Francisco for an interview. I'll never forget, I actually ran into one of my managing directors at Regions in San Francisco while I was interviewing, which was an awkward, literally an hour before I went into the interview. And fortunately, he used his discretion. It was very supportive, but it was a little bit of a nightmare situation to be in, also 3,000 miles away from, my office headquarters. It just felt pretty unusual. It wasn't down the street.
What are the odds, right?
Seriously, what are the odds? But it's funny how that works out. And then, I was flown out for a super day. Saw the folks that I was interviewing against in the whole room together, and then ultimately got the job somehow, which was phenomenal. And I remember I had a really good staffer in the leverage finance department, Kara, who sort of covered for me to enable me to fly out to San Francisco and miss a day of work for the interviews. So thank you, Kara.
And Chad sounds like MVP here, right? Learned how to make a really bad model and maybe referral.
Totally. He's an MVP. That's for sure.
Yeah. So it was that first position with William Blair based in San Francisco?
It was. Yep.
It was. Okay. So I would imagine that there's a lot of similarities, but also a lot of differences, going from the Southeast to San Francisco, the heart of it, all tech, all software, and a really well-respected, well-known, again, mid-market firm with just an incredible track record. So what were some of the things that you learned at Regions that really helped you, in that first part of the transition? Were there things you drew on, or that you feel like, that you kind of got your feet under you and helped you initially in your new role?
Yeah, I think the exposure to the breadth of products at Regions was instrumental in helping me understand more of the William Blair role. It's important to mention that I was more specifically focused on M&A, so mergers and acquisitions. But we occasionally brushed into equity and debt capital markets transactions at Blair. And so my fellow analysts didn't have as much experience with that. But where I was able to really apply some of my Regions experience was understanding what a leverage loan for one of these technology companies might look like in conjunction with a buyout, which is like what we were helping enable. And then, just the basic, once we actually learned how to model, the basic LBO modeling, the PowerPoint presentation, that sort of stuff. I think what I wasn't as prepared for was the bar, the work quality output bar felt much higher. And the transactions felt slightly higher stakes. And so that was something I had to come up the curve on, is that like every period is perfect, every box is aligned perfectly. And there was some rigor around that at Regions, to be clear, but getting vaulted into the heart of Silicon Valley and these high stakes software M&A transactions, like that became a really paramount part of the job.
Yeah. What about the pace? Were you, we're going to talk a little bit about this. Were you working a lot more when you got to William Blair, or was it a similar pace?
I was working a lot more. I would say my work-life balance was more manageable, but it was certainly a step up in hours. And I mean, the good and bad news about investment banking is that you can sometimes be really slow when you're not working on a transaction, particularly if you're an M&A banker. But if you're engaged on a transaction, you're pretty darn busy. And so like when I was working on the Linux Academy transaction, for about 6 months straight, I was, working pretty intensely. But then afterwards, the bank did a great job of giving us like a month off without a sell-side engagement, so that you could sort of, go back to that 9 to 5 type of vibe for at least a short period of time.
Yeah, I remember very distinctly. I would wake up in the morning, we'd be traveling, and I would wake up in the morning and I'd have a bunch of emails from you and your colleagues that were being sent in all hours of the night. And I know that I was going to see you in half an hour in a meeting. So I knew what hours you were working just by the trail. And on top of that, you'd come in with like the big binders of things printed. And I'd be like, not only was she doing all this, but she was, coordinating somehow to magically come out with the latest, thing that we have together on paper too. It's a lot. It's a lot.
Yeah. Well, I didn't do it alone. I had a lot of great support from my team. It was like one of the strongest teams I've had the chance to work on. And at William Blair, there's a whole sort of back office function that's great at helping you print those books out, create some of the images on those pages. And so there's this whole pretty much army of folks that help enable the bankers to look good, I guess.
Yeah, an incredible team for sure. So a lot of people ask me in investment banking, when you get started, are you really working, they call it, some people are like, do you really work 100 hours a week? Do you really have to work, 80 hours a week? Like, what at the height do you think was it like? And again, and you get the balance because you get the breaks, I know. But, there was just, I'm sure in crunch time, it's pretty crazy. People just need to be aware and be prepared for that.
When COVID came around, I basically said to myself, how can I continue to work in software with slightly more manageable hours? And the insight I had was, if you get out of direct client service, you might have a chance at having, a more normal work-life balance. And so investing, while we still technically do have clients, our LPs, and then our portfolio companies, it's less of a more direct client engagement than a consulting or a banking job. And so a friend of mine at William Blair, Sam Kushner, had gone to work at a large asset manager called Blue Owl, which today was formerly known as Owl Rock, and primarily provided sponsor credit for private equity-backed companies. Today, it's a close to $200 billion asset manager. They have multiple different strategies, really a behemoth, publicly traded company, great leadership. And anyway, back then in 2019-ish, Sam had mentioned, hey, we're hiring out on our West Coast team. And the strategy is going to be a little bit different. They're going to, also look at credit products, but there's a broader mandate, meaning they're also going to look at VC-backed growth stage equity deals. And so I didn't really know what a lot of that meant, to be clear with you. But I knew I was willing to learn. And I had transacted with investors across the table as a banker. And so I just thought if I could change my perspective to be in their shoes, evaluating these businesses versus my shoes, which was positioning them to sell them as an M&A banker, I might be okay at it. And so I took that, job in Menlo Park with Blue Owl. And it was an incredible experience, mostly because I had the opportunity to work on 10, 11 deals squarely in the pre-IPO growth equity asset class. And so that was kind of my next foray into this wild world of software.
Yeah, that's a nice mix. I mean, that's a good number of companies. So you said something there though that's really key. You said, when your associate was kind of mentioning the opportunity at Owl Rock, you didn't know what a lot of those things meant. And I think that's an important juncture. A lot of people have those moments and they kind of freeze, or they think, well, that's not for me, or I don't have that experience, or I'll never get it, versus just having confidence that they can figure it out. And like that, just, um, somebody that just propels through those moments. And certainly your career kind of strikes me as that a little bit, but that seems like a pivotal moment of just, we need to propel through those moments. Right.
Yeah, absolutely. I think the transition from Regions to William Blair was uncomfortable. I didn't have much of a network in San Francisco, didn't know what awaited me, but sort of took a leap of faith. And then during the transition from Blair to Blue Owl, it was, spring of 2020. And so COVID had just hit. No one knew if the sky was falling or if we were going to get a vaccine or whatever. And so it was probably the prudent choice. I remember my parents saying, stay with William Blair, you know what they're all about. They're good people, and we're in this uncertain macro environment. And I didn't listen to them, and I just took the jump, and it was the best jump I ever made. So it's, I'm just being I was 20, like 4 or 5. Right. And so being young, taking risks, it's something I would encourage folks to do, as long as the best advice I got was actually from Ryan. He basically was like, if you feel like it could be the next right step, even if it's not exactly where you think your career is going to end up, if you feel like you're making forward progress and it's the next right step, I would encourage you to, go see it through.
Yeah. And take risks when you can, right? Because you don't always have that optionality, for sure. Ryan, coming in with the good advice, probably as usual.
Yeah.
Well, you parlayed that role into what many people would say is a dream job. And that is where you're at now. So tell us a little bit about moving from Owl Rock to be a growth investor at Bessemer Venture Partners. And tell us maybe just a high level too about Bessemer. I think its reputation speaks for itself, but maybe just give a little intro and then tell us about making that change.
Yeah, absolutely. Definitely dream job. Bessemer is a phenomenal venture firm, probably top 10 in the world, if not on a shorter list than that. Bessemer's been around for almost 100 years plus at this point. The firm was founded out of the Henry Phipps Carnegie steel sort of era, which is what Bessemer is named for, the steel making process. And so in those early days, I think they created Bessemer Securities, which was a family office, and then into the back half of the 20th century began to invest in the cradle of technology. We've since diversified our LP base away from just the Phipps and have global LPs all over the world. We're investing out of our 12th fund, which is a $4 billion vehicle. We invest from idea to IPO. So like at the earliest stages all the way until these companies are mature and publicly traded. What else can I tell you about Bessemer? We're, in addition to being stage agnostic, we're industry agnostic, which means that we have coverage across, everything from consumer to deep tech, completely global organizations. So offices across India, Israel, Hong Kong, London, to in New York, one in Boston, 2 out here on the West Coast. Something that's awesome about Bessemer, it's a non-consensus model, which means that each of our 24-ish general partners is empowered to make his or her own investment decisions based on his or her own conviction in a company. And that's a pretty unique model that attracted me to Bessemer, is just this empowerment value that each partner really has. At Bessemer, I work in our growth fund, which is a technically a separate vehicle from the $4 billion fund that I mentioned. It's about $1 billion of AUM, and it exists to follow on our winners, which are companies we've invested in at the earliest stages, but also to pursue net new growth opportunities. And so in that role, I've had the good fortune to work with a number of transformational companies, Series B and beyond, primarily in this new exciting wave of AI. And so that's been a lot of fun. And then the partner who I work with most closely at Bessemer is a guy named Samir Dalakia, who's been an incredible mentor here at Bessemer. He was a Bessemer-backed CEO. He ran a business called SendGrid, which he took public and through a public-to-public acquisition, and then came back as an operator turned investor here at Bessemer as the head of our growth fund. And so he's really brought a unique perspective to investing that I didn't appreciate as much, which was the operator's point of view.
Yeah. So what is tell us a little bit about the role itself, and the growth investor role. And yeah, just maybe let's start with that. Like, what is a day in a life, and what are some of your responsibilities?
Yeah. So, I mean, the good news is that no 2 days really look the same. But I would say, by and large, the role is kind of split into a few different buckets. The first bucket is identifying and speaking with prospective investment opportunities and trying to determine which ones are, really interesting and probably worth spending more time with. And so that's something I really enjoy, because speaking to entrepreneurs, particularly ones that are at the growth stage, and so they've achieved product market fit, and they're thinking through questions like, how do I better optimize my go-to-market, or how do I get from 10 million of ARR to 100 million of ARR? How should I think about product strategy? Those are the types of questions that I love to sort of riff with founders on. So that's probably 30-ish to 40-ish% of my day-to-day, I would say. And then the sort of remainder of my time is split between a couple things. One is Bessemer is a very roadmap-driven investment firm, which means that we like to have a point of view on the industries that we're investing in ahead of time before we sort of reactively meet companies. And so most recently, I've been leading some of our work in AI for contact centers, and how AI is going to basically transform what the modern contact center looks like, as well as how AI might transform the B2B go-to-market sales engine and marketing engine for a lot of these enterprises. So that's, probably 10 to 20% right there. And then the remainder is supporting our existing portfolio. So the companies that, we have invested in and have board seats with, and, want our expertise or help with hiring or stuff of that nature, we'll spend, a couple days a month really going deep with them and helping them ensure that they're enabled to do the best they can.
Yeah. What do you love most about the role that you're in now?
Yeah, I think, it's very trite to say this, but the people. There is really no person at Bessemer that I wouldn't consider a friend. And what I mean by that is somebody who I can speak with openly and frankly, grab a coffee with or grab a drink with, and feel like I can connect with them on a human level. It's rare to work at an investment fund where, everyone is very collegial and dedicated to each other's success. And I think that the firm has done an excellent job of cultivating that type of culture. And if you come in sharp-elbowed and sharky and, Gordon Gekko type of persona, you could be the best investor in the world, but your career at Bessemer won't be long. And I can't say the same of that of every place I've had had experience with. So I think that's probably my favorite part of the job.
Yeah. Has there been anything surprising about being in venture now and making that jump that just surprised you, or something that's different or that you've learned?
Yeah, I think the cyclicality of the industry is interesting. Like, inherently, it's a boom and bust market, which is why when I told my parents I wanted to work in venture capital as two attorneys, they said, "We don't know much about that, but it seems pretty risky." And I was like, "Yeah, maybe." But I witnessed this kind of meteoric end to a bull run during my time at Owl Rock Blue Owl. And deals were getting done a day. It felt like a company a week was going public. Prices were at all-time highs in the public markets and the private markets. And then in 2022, the music sort of stopped and interest rates went up and mutual funds cycled out of technology. And we saw a massive correction and sort of bust in the technology segment. And so having experienced that, I'm very grateful to have experienced it so early on in my career, because it's not all champagne, right?
Yeah.
And so you have to make decisions to invest in companies that are durable, even in recessionary times, in times of higher interest rates. And so that has been pretty eye-opening to just kind of experience what investing was like in 2021 and what the kind of new normal looks like in 2024.
Yeah. And it changes so much, but then also here we are, right? Still investing, still working. It's just, it's interesting how much things change because the market conditions have changed, but also, the underlying is still the same. Yeah. So this has been great. I have one last question, but before I do, I just want to say, I think if you, every career step and change that you've made just feels like it was a great natural next step, but I think anybody going, in 7 or 8 years, going from North Carolina and working at Regions to being a growth investor at Bessemer, like that feels pretty, it is it's a rare path. Like it just, a little bit magical. Somebody who's, sitting in that spot that 8 or 9 years ago, whatever it was, thinking like that's a career path that I really aspire to have. What advice would you give to them?
Yeah, I mean, I think I would just encourage them to follow their curiosity, right? So when I took the step from Regions into software, I didn't really know without a shadow of a doubt that I wanted to be a venture capitalist investing in these software businesses. But I knew that I was more curious about software than I was about scaffolding. And so I think really Ryan's advice holds true, is just, if you think that next right step could be a step in the right direction, take it, even if it might be a little bit scary or uncertain. And the good news is about like navigating these roles in your 20s is that you can have, 3 or 4 jobs to be able to find the right fit. That's sort of the benefit of being early on in your career. Is I would just encourage you to, soak up as much knowledge as you can from your existing employer. And when you feel like you've, sufficiently gleaned all that you're going to glean, just turn yourself outwards and follow that curiosity to find the next great learning opportunity for yourself.
Love it. Love it. And get to those moments where you don't necessarily know every word or phrase that somebody's telling you.
Yeah, right.
Power on. I love it. Well, thank you so much for being a guest on the podcast and sharing your career story. I really appreciate it.
Yeah, it was a ton of fun. Always love spending time with you, Anna. So my pleasure.
You too. And by the way, scaffolding now apparently can be cool. I heard about an AI scaffolding assembly platform that like is doing like supply chain management, but just also like where it's going, like assembling it, like doing all of that really quickly, and then like managing when it's going to come down, and like so the scaffolding can go to the next building. And so somebody's doing something cool with scaffolding. Yeah.
Let's follow up after you go on that one. I'd love to learn a little bit more. So
love it. All right. Thank you so much, Alex.
Thanks, Anna.
Thanks for joining us today. We hope you enjoyed the conversation. FinPod is brought to you by Corporate Finance Institute, the #1 rated online provider of finance and banking training, certifications, and productivity tools.